All right, so I'm just doing this trading recap um, as a introspective kind of way where I'm just talking, not really pointing out, like not doing the notes and everything and all that, just to save some time and feel like it's more efficient and just gonna see how it feels. So, so I'm just gonna start on the monthly and just work my way down, but you could see that we have December's high up here, and then we have January's low down here. And so initially we were all the way up here, and I thought we were gonna go make a new high, and no, I didn't. But now looking at the monthly with 2 days left, um, we could be looking at January's low for draw on liquidity, and I was seeing that going into this trade, but you see more on the lower time frames. So just hopping on the weekly, so it's more defined. You can see way more pools of liquidity down here. We have this daily swing low, which is a weekly low. We have a weekly swing low, and then January's low right here, weekly swing low here. This is like the main one. So the price is willing to get down here, or even down here. Just take this liquidity up. They're all pretty much equal. And that was pretty much like the directional bias. We were bearish. And so that's what I'm looking at. And then going down on the daily, market's about to close in an hour, so I just told myself I'll just do this right now. So here's today's trading day. We closed Tuesday on a down day, and previous day low was my draw on liquidity. Or it was kind of. Initially, it was this high, previous day high, but lower time frames, you'll see more information. But so we have Tuesday's low here closing, and then I dragged the fib. So I dragged the fib, and we're in discounted levels. But then obviously, I was keeping that in mind, but I wasn't like saying, "Oh, we're in discounted levels, we're gonna go higher," because we're not, and we have these pools of liquidity. So that's just something to keep in mind, and that was something that I was looking at, but yeah. So we go down on the 4 hour. Let this load. 4 hour. Here's today, and so we have this swing right here. We're in discounted levels, but I'm using this swing relative to midnight open. So I was using this swing, and you can see that we're in premium levels. So you can see how it doesn't make sense for price to get all the way up here, but it does make sense to get down here. And this was my draw on liquidity for the day, which you'll see on the lower time frames. And but you can see these buy side liquidity. Tuesdays equal highs, Mondays London equal highs, which you'll see on the lower time frame, and all this here. So once gets all this sell side liquidity, I'm looking for upside objectives. But for right now, we're bearish. Everybody's bearish. Everyone thinks we're bearish, and it makes sense. So I was just seeing this as a retracement up, and then it took out this sell side liquidity, and I was actually going long, which you'll see on the lower time frames. Like I said, the reason why. And then yeah, you could also see this 4 hour inversion fair value gap. price gets into consequent encroachment and then rallies lower. I wasn't using that because I was using the hourly, which you can see. See, I was using this one. So we're in this range, discounted range, and I was just seeing if there was any, because we're in a market maker sell model, buy side of the curve, sell side of the curve. So what I was essentially seeing was there anything like a reclaimed order block, which would need displacement down. Does it hit? Does. Needs displacement down prior to the move up. But I wasn't. And then we have another inverse fair value gap. So we have all these PD arrays, but I was just focusing more on where price was going to open up at midnight and 8:30, and that was the main thing. And so you could see these Tuesday equals highs that we left, and then we have this inverse fair value gap on the hourly, which beautifully respects it on the bodies. But the idea is, so here's 8 o'clock. It actually sweeps London's high, and then it rallies down. It closes on a down candle. And so at that moment, I was looking to be a buyer down here below midnight. So right in here, different color. Order. So right in here, I was going long. Okay. So I was going long. So midnight opens, rallies away. It actually taps into London's high and then rallies down. Here's 8 o'clock, gets up into this high again. So it retests London's high 2 times. And that's when I saw the market. So market opens at 8:30, and that's when I saw the market rally lower. That's when there was a shorting opportunity, but it was too early in the session, and the 15-minute candle didn't close. And that's like one of the rules that I have. So this was a sell side liquidity pool. I was also using this one as well, and then I was using which one else? Yeah, so I was using this one too. So this was the only one I was using. Or these two were the sell side liquidity pools, and I was seeing how far was price going to reach towards. And so right around here, I was going long with the new day opening gap and previous settlement price gap as well. And so it makes sense, sweeps buy side, sweeps sell side. We're below 8:30 and midnight, and so from here, and then there was these relatively equal highs for the draw liquidity, runs through that, respects inverse fair value gap beautifully, and just rallies down towards PM session. 12 and 1. These are these two down counters, 12 and 1. So yeah, so that's what the idea was. waking up. I wasn't gonna go short immediately, especially during past experiences. It's been difficult, or it hasn't been difficult. It hasn't played to my part. Trading early in the session, like before the 15 minute down candle, or 15 minute 8:30 opening hasn't been playing in my favor, based on my journals and everything. So I just let it go, and yeah. So you can see on the 15 minute. So this one, yeah. See, why does it not show? Stand right. Let me see. Oh, because it's too tight. It's too low. On there. All right. So this is what we're working with. So midnight opens, rallies. Here's London's high. It barely taps in out of it. High comes at 21,329.25, 21,328 points. So by one handle. Okay. And so it goes down, taps into it here, rallies, a little retracement to this fair value gap. And then it rallies one more time, and here's 8:30 opening. Rallies one more time into this high. Okay, and that's when I saw, okay, it sweeps this high, but I'm not gonna go short because it's too early, and my draw on liquidity was this low right here, 7-8. It was 7 a.m. low. I remember. And this low right here. I didn't wait for it to close, but either way, I was looking for this low because ultimately I knew that 8:30 will open, and I knew that after the opening it would provide some kind of a retracement or reversal. It's not just gonna open and then continue rallying down. That was my thought process. Especially I wasn't gonna short below 8:30, but we were above midnight. So essentially I wanted to see some kind of sell side liquidity pool where price is gonna reach towards. So it sweeps this low, and that's where I'm going long. Okay, we're below both 8:30 and midnight. That's where I'm going long. So then here, something to know, from Tuesday's previous opening range gap, we were left unfilled. So it never filled it in after 9:30, and then it partially 25% around fills it in, and that's something to know after, or to one of the reasons why I was going long. So midnight opens, rallies, 8:30 opens, and look, see, right on this doji candle, it just quickly rallies down. Okay, I'm seeing that as a manipulation. Gets to my sell side liquidity pool while also feeling a complete fill for the new day opening gap, and it hits it at 9:30. Okay, and so I wait for 9:30 opening range, closes everything in, and this is where I'm going long. This is executions, and you can see that it did go higher, but it's the execution that got me. Going in the 1 minute. So sweeps lows. We're in discounted markets based on this price swing. See, discounted markets. Pretty obvious with 8:30 and I also signaling that. And so everything was lined up to go long, you know? And then right here, this is where it kind of got tricky, where to place my breaker. So here we get first presented fair value gap with the breaker breaking market structure and this low breaking, making a lower low. Okay, and this is what I utilize. And so price enters, I enter a consequent encroachment, and ICT was saying that price shouldn't get down here for a complete closure. That's like what was preferred, and so I placed my stop right at this low. Price comes in and then just rockets.